Goldman Sachs' big bet on NEO and a world-first battery REIT, the two signals proving NEO's turnaround is real. Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. On paper, NEO is still losing money. Its Q4 revenue forecasts narrowly missed estimates, and its current liabilities exceed its current assets. Yet, in the world of institutional capital, perception is reality. And right now, the perception of NEO has shifted decisively. Two events in the past 48 hours confirm that sophisticated money is no longer betting if NEO will recover, but how strong the recovery will be. Goldman Sachs isn't trading, it's anchoring. When Goldman Sachs increased its NEO stake by 57% in Q4 2025, bringing its position to $71 million, it wasn't a retail trader chasing momentum. It was a strategic re-entry from a firm that had let its holding dwindle to just 1.8 million shares in early 2025. Goldman is now NEO's sixth largest institutional shareholder. Crucially, Goldman did this knowing NEO was still unprofitable. That matters. Wall Street's most influential investment bank is signaling that the losses are legacy, not structural. Goldman has simultaneously raised its NEO's price target to $7 from $4.30 and pulled forward its EBIT break-even forecast to 2028, a full year earlier than previously modeled. This isn't charity, it's arithmetic. Goldman explicitly cited improved model competitiveness, the L90, the ES8, and raised its 2026 to 2030 volume forecast by 6 to 11%. Merarity, on the other hand, just solved the capital intensity problem, my dear lads. The bigger story, however, is hiding in plain sight. With Merarity's $72.5 million REIT insurance, this is the world's first whole-type power battery REIT. Translated out of financial jargon, NEO has just proven it can recycle billions in battery assets without selling equity or burning cash. How you like them apples? Here is why this is a transformational. When NEO customer subscribes to BAS, Merarity owns the battery. That asset sits on the balance sheet and ties up capital. By scrutinizing these batteries into a REIT, NEO transfers that capital cost to income-seeking investors who now own the rental income stream. NEO gets the cash upfront, investors get the yield. It is an asset-light strategy applied to the heaviest part of the business. This is not a one-off. Merarity now manages over 40 gigawatts of battery assets and has executed a clear roadmap from equity financing Series C to ABS and now to REITs. Each step widens the financing funnel and reduces pressure on NEO's corporate balance sheets. The conversions is the signal. Individually, these are positive headlines. Together they form a coherent thesis. Goldman stake says demand is real. Merarity REIT says the business model scales without diluting shareholders. Unlike what that one YouTuber was just saying, that congratulations to NEO, but here comes the dilution. I have bad news for that boy. One validates the top line, the other de-risks the bottom line. NEO still faces intense competition and bears remain skeptical on its valuation, but the narrative has shifted from survival to execution. When a global bank increases exposure at a 57% clip and a subsidiary executes a world-first financial innovation in the same week, it is not coincidence, it is confirmation. The market is beginning to price NEO not as a turnaround story, but as a growth story with a credible path to capital efficiency. For long-term holders, that is the most valuable upgrade of all. So I hate to burst that YouTuber bubble. I've burst many YouTubers' bubble in the past, and I make no apologies for it. I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, boop, boop, don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.